JPMorgan coming out of the gate strong. It boosts full-year guidance as second quarter revenue rises to a record, helped in part by its bargain price acquisition of First Republic. Net income surging 67% on the year to $14.5 billion. Trading and investment banking revenue also comfortably beating expectations. Provisions for credit losses higher than expected at $2.9 billion, also in part because of First Republic. And that is a key number as big banks prepare for the impact of a possible recession. On the state of the consumer, CEO Jamie Dimon says balance sheets are healthy and consumers are spending, if a little more slowly. Higher rates also boosting Wells Fargo. It beats the street on the top and bottom line. Total net income for the second quarter jumping there to $4.9 billion. Net interest income, that's the difference between interest paid out and interest earned, rose 29% year over year to $13.2 billion. And Wells is also boosting its outlook for that number for the full year to 14%, up from the previous projection of 10%. The overall earnings beat even more notable after the bank booked $1.7 billion in a provision for credit losses. And this earnings tailwind joining a CPI boost as stocks look to close out the week on a high. Global equities are on track for their best week since March, and stock inflows continue to gather pace, but beware, says B of A, capitulation risk is in the cards. Fed policy will be pivotal to any extended gains. The San Francisco Fed's Mary Daly says it's too soon to declare victory on inflation. Governor Christopher Waller also adding to the debate. He expects the central bank will need to raise rates twice more this year to bring inflation toward that 2% goal. Investor Bet suggests that's certainly not a sure thing.